Jay, what strikes you interesting about this name and your reflections on the week we've already had?
With Chewy, unlike, say, CrowdStrike from earlier this week, the barriers to entry aren't obviously there, and great company. But as with many of these issues, there are questions about at the valuation that the market is talking about. Is it going to be a good investment on a point-forward basis?
And the answers are?
I wish I knew. I could have retired long ago if I knew that.
Leslie, your thoughts on where we are and given the indications this morning?
Oh, I think what's remarkable is the valuation here. Just to put things into perspective, Don was quoting about a $14 billion valuation if it opens at about $35, $36 a share. PetSmart itself, which is the parent company for Chewy, that was acquired by BC Partners in 2014 for $8.7 billion. So that's about half the valuation that we're looking at for the opening trade today. Blue Buffalo, that was acquired by General Mills about a year ago for $8 billion. So this thing is coming out at a valuation at $22 per share is $8.8 billion. And then opening trade is looking at, 60% higher from those levels. So it's pretty remarkable what we're seeing today, especially since, this is an e-commerce company. This isn't, they sell pet food. They're in the right space at the right time. It looks like the shares have just begun trading.
There it is. 36 and change here, guys, which is about 64% gain at the open. Again, as Leslie pointed out, priced at 22, which was above the range. Jay, have you developed a model to see how day one puts you in good stead or not in the weeks to follow?
Yes, and the model is that there's not a lot of predictive power. If it starts trading down, there's a tendency to drop a little bit. But for those that jump on the first day of trading, there's no easy trading rule to predict how it will do in the next few weeks or even the next year.
Jay, I'm wondering with Chewy in particular, it's still majority owned by PetSmart, which has a whole lot of debt. And people who are buying the stock today are not really going to have any say, vote-wise, in the direction of this company. So what are the dangers? What are you really getting if you're buying Chewy and don't really have a say in what PetSmart does?
Well, there is that corporate governance issue, but on the other hand, if the parent company does something that's obviously harmful to the Chewy stockholders, there's also the legal avenue. Plaintiffs' lawyers sometimes overreach, but they do offer minority shareholders a lot of protection in a case where there is a parent company or a private equity company or dual-class shares that does not give public market investors control.
Let's check in with Dom over at Post 5. Dom.
So what we got right now, guys, is a high intraday of $38 after pricing at $22 per share and then opening at $36 per share. So as we talk about the movement that we're seeing so far, remember, we did see a $26 to $29 opening range when we first started quoting the indications on price. As of right now, what we are seeing is, again, a new high again, $38.50. You're talking at this stage about a 73% increase in price. To many of the points that you guys have brought up, this does kind of call at least a little bit of attention, not necessarily negative or positive, to the idea that there is a healthy amount of demand for certain brand names out there in terms of private companies. On the IPO side of things, Chewy, which does have competitors out there, is now valued at north of around 14.5 to close to $15 billion at this stage, making certain assumptions for the number of shares, the green shoes, and everything else that will happen. But still, on an estimate basis, this does really kind of raise some flags about whether or not the IPO market is near a level where some people are a bit more skeptical about it. I would also point out that this has been a decent year for IPOs in terms of price performance. Remember, prior to today, Renaissance Capital says that we've had about $26 billion raised in 65 initial offerings. And generally speaking, 60% of those offerings have traded still above their IPO price. I would also point out that one of the ETFs they manage, a smaller ETF that tracks the IPO market, has more than doubled their performance of the S&P 500. So this is certainly a big day for many Chewy shareholders, especially their private equity owners and PetSmart and everybody else. But the idea here is that this is now beyond meat. Now this has really raised a lot, guys, of questions about, to Professor Ritter's point, the valuation of certain companies in this marketplace. Back over to you.
Yeah, Dom Chu, thank you. Stock's up 79% from that IPO price. Leslie, I would add Fiverr to that, given the fact that we saw those shares surge 90% yesterday. CrowdStrike also going public earlier this week, up 70% in first day of trading. Venture capitalist Bill Gurley came out on Twitter yesterday, argued that, what you're seeing is basically a broken IPO, whether it's CrowdStrike or whether it's Zoom, that basically these companies have mispriced going into trading, and they've left a lot of money on the table.
Yeah, you bring up a good point, Morgan, including Chewy, assuming it closes, where it's trading right now. We will have seen 14 companies
I'll be hanging out down
trade at upwards of 50% on their first day of trading. 14 companies are doing essentially what Chewy is doing right now. And I was speaking with sources yesterday about that Gurley comment, and they're just saying it's really hard to price these things. When you look at what they did with Chewy, they raised their range because they saw the high demand. They priced above the boosted range, which is pretty rare. Usually you see things at the top end of the boosted range, but they priced above the boosted range and still up 77% right now. That's remarkable, and it makes the job of a banker very challenging to assess demand, because you don't want another Uber, another Lyft, but you also don't necessarily want such momentum and such mania as you're seeing with a lot of these companies.